The distinction between the metals and the metals stocks is sometimes subtle, sometimes very in your face that, any of those companies have so many other factors to deal with besides just the price of their product that they're mining. And I think since COVID and since then, you've had so many cost increases, and we're talking about inflation. Well, all those companies are dealing with higher costs for everything involved in their production, that to do it profitably, they need to see those metals prices stay up at those higher levels for a significant amount of time. Then it starts to build up in the value of the stock.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to the Financial Survival Network. I'm your host, Kerry Lutz, and we're right in the middle of March. We figured we would touch base with Eric Hadik and get an update on where the cycles are heading, where the markets are heading, and what you need to do about it. And Eric, it's great to have you back on. So first, March has become another month where stock market crashes seem to be happening with more frequency. Are you seeing any type of stock market crash on the horizon here?
I don't know that I'd classify it as a crash at this point. I think we are definitely in overbought territory, and that we're going through at least a multi-month topping phase right now. I'm looking at the late March through about mid-May period as being a vulnerable one for the overall stock market. But I've also been kind of describing how, from a price structure and a comparative structure, you've been getting a lot of the primary stocks and indexes already signaling that a top is forming. There's been some of your key indexes that peaked in December, some in mid-February, and in all those cases, that was very consistent with a 2-year cycle that has impacted the markets for the last 10, 12, 14 years, and in line with the cycle progression tool I use. At first, that cycle timed some significant lows right around February, followed by rallies back in 2012, 2014, even 2016. You had a low in February and then start to rally from there. And then that cycle gets to the point where now it's expected to invert and start timing successive highs. And you saw that in beginning of 2018, beginning of 2020, beginning of 2022, each time a multi-month or longer peak taking hold by the end of February. And so you're kind of into that same cycle now, but price action is always the determining factor. And so I'm looking for additional signs that a top is in place in some of these indexes. It's even kind of interesting to look at the Magnificent Seven stocks. It used to be the FANGs that everyone was watching. Now it kind of got expanded a little bit and tweaked a bit, and it's now the Magnificent Seven. But even I look at markets like that on a weekly basis and a weekly close basis, and you look at when each of them set their highest weekly close, and there's 2 or 3 of them that had done it just in the last week or two, which would be expected if a market's continuing to go up. But the other 4, I believe, set their highest weekly closes anywhere from December through early February. So even there, you kind of have this divergent top in the making. So that's what you expect to see. as a 2 to 3 or 3 to 6 month peak is taking hold, and then it's just looking for the one specific sell signal that kind of fires the starting pistol and says, okay, now we've officially signaled a top and starting to enter a down wave.
Okay, and so with the down wave in the markets, what do you think is going up? Is there going to be a compensating market that goes higher as a result?
Whether that's a straight up inverse correlation or not, I do think that there are some markets that will be rallying during that time frame. I think that bonds and notes and your interest rate vehicles should be bottoming in the next week or two, kind of setting a secondary low or retesting their previous lows, and that they will probably be starting to rally. Of course, that's often the case. You either get if the market were having any sort of precipitous drop, you often get a flight to quality, safe haven type of thing. But I also think that from a broader standpoint, you could start to get some of these signs over the coming months that there's maybe a few other weaknesses in the economy that haven't been reflected up to now. And maybe even some of those inflationary indexes start to give the Fed a little more room for talking about rate cuts. And so it would be natural to see bonds and notes start to rally. I'm looking at a couple other markets that could have some intervening rallies, but not necessarily a one-to-one, rally for the whole time the market's going down type of scenario.
Okay. And, all right. So gold, silver, gold's been trading close to 2,200, but it can't quite break through. When we last spoke, it had just broken over 1,000. So what are the tea leaves saying there?
Well, I still contend that late 2022 low was a major bottom in gold. It was the recurrence of a very consistent 7-year cycle that timed lows in gold and or silver in 2001, 2008, 2015, and then 2022. When we came into early about October of last year, 2023, all my work was showing that we should see a secondary low and a surge from there. Many of these moves in gold and silver are limited in time. You get a 1 to 2 month surge, and then you get 3 to 6 months of just kind of sideways consolidation action. And so even back then, I think I was talking with you and in all my publications saying that gold should surge up into the first week of December and probably top around 2150. Well, that's what it did, and it had consolidated since then until it completed just a textbook kind of ABC correction where you get an initial decline from that high, then a slow rebound, and then a decline to a slightly lower low below the first decline's bottom. And that was completed, that's a pattern was completed in mid-February, and gold and silver both generated some very convincing buy signals that I put out to my readers right after mid-February. And the upside target for gold, which at the time was trading around 2025, it was for a surge to all-time highs and up to about 2,300. And that remains my primary target for this phase of gold's move. And if and when it reaches that, it could be a bit like that 2150 level back in early December, where gold sees this accelerated spike up into around 2,300 and then enters another consolidation phase. But each time it's building higher plateaus, and it's reinforcing the bull market that it's been in really since late 2015. And even though the dollar itself has disguised some of that, when you look at gold versus the dollar, it has been in a steady incline since the beginning of 2016.
Mm-hmm. Yes, it certainly has. And but it's at some real peaks and valleys there too, hasn't it?
Oh, absolutely. And that's what you expect in the gold market if you've been around it for any amount of time.
Yeah, that's for sure. And we've been around it now for decades. So the volatility, and then in silver, it's always buckle your seatbelt, right?
Yes. And I think that silver is slowly building a base from a higher plateau, and that there's going to be a couple time frames in the coming year where I think silver is going to be the one that really sees some significant up moves. And it, gold and silver tend to kind of go back and forth a little bit like a tag team situation where the one surges while the other's kind of being drug along to the upside, and then all of a sudden the one peaks out and then the other starts to play catch up and often surpass it. But I've described what I call the sweet spot for silver from an inflationary cycle standpoint. And I think we're right in the throes of that, where you have an overall market, an economy that still has a very solid inflationary underpinning to it, that even though many of your inflation index or indicators have showed signs of slowing, or the rate of increase has been dropping, you get those semantics where they say inflation's going down, but what they really mean is that the rate of increase is diminishing a bit. It's kind of like when Congress does a spending cut for next year, but somehow they're spending billions more than they were the previous year, but that's a spending cut. And I think that you've got that situation with inflation in the market, and traders really need to understand how gold and silver interplay with an inflationary type of market. And when you've got the threat of rising interest rates, which you've had for the last couple of years, or you've had, then that keeps a lid on gold and silver. And it's when you get into that time frame when the inflation is still there, still spread throughout the market, but interest rates have peaked out, and most of the perception is that interest rates are not going any higher in the foreseeable future. That's when gold and silver, it's like this big weight that's been put on their shoulders up until that point. So, they're trudging up a hill or something with all this burden on them, and all of a sudden that burden's removed, and that's when they really come to life. And often you'll see the majority of an up move happen in a limited period of time, but it's very significant. And I think that's where we are in gold and silver in 2024.
All right. So we're on the cusp kind of the big move, huh?
Yeah. Some of it, like in gold, some of it has been happening. Silver, I think, is still setting up for a little bit more significant move up at a couple key times later this year. Yeah.
Well, it certainly wouldn't surprise. It's lagged so much, and then the mining stocks as well have really been in a world of hurt.
Yeah.
So I started a new site, by the way, called the Inflation Cafe, where dollars go to die. And so talking inflation, talking gold and silver, it appears that, the mining companies, the mining stocks, especially the juniors, have really taken it on the chin. They can't really get any respect in this market. Even the producing companies, Newmont has had no gains in years. Are we gonna see a reversal of that? Are the stocks going to lead, not only participate, but lead? Because traditionally in a bullish, precious metals markets, the stocks lead, right?
Yeah, I think that, the distinction between the metals and the metals stocks is sometimes subtle, sometimes very in your face, that, any of those companies have so many other factors to deal with besides just the price of their product that they're mining. And I think since COVID and since then, you've had so many cost increases, and we're talking about inflation. Well, all those companies are dealing with higher costs for everything involved in their production, that to do it profitably, they need to see those metals prices stay up at those higher levels for a significant amount of time. Then it starts to build up in the value of the stock.
Mm-hmm. All right. So this is a question of time. Eventually, it's in all likelihood going to happen.
Well, you have the other weight or the other consideration of the overall stock market. And, I've seen many times where gold and silver are heading higher, but maybe it's because the stock market is going down and they're being viewed as a safe haven. Well, then the gold stocks have a really competing factors hitting them, whether they're going to go up with the price of the metal or whether they're going to go down with the majority of the equity markets. So you need to really treat them individually, analyze them on their own. In late February, my work triggered some buy signals in the XAU and the HUI indexes, and it's been showing me that the XAU should surge from when it was down around, what was it, two? Let me just look real quick here, the number where that was triggered. It was down near 106, and my work was showing that it should see a surge up to 120, 121, and then probably on up to 134 to 138 in a short period of time. And we've seen the first part of that, and I think even within a week or two, it's possible that we could get up to that 134 level if some specific things occur today and tomorrow, March 18th and 19th, in the price action of that index. So you kind of get this, just like gold and silver, you get this very abrupt, sharp swing, and then it goes into consolidation mode for quite a bit of time. I often describe where the correlation between the mining stocks and the price of the metals, you almost need to treat it like a long-term moving average, where the metals is what you're looking at as the moving average, and they have to, over an extended period of time, increase enough that they're, say it's a monthly moving average, that moving average has to get high enough that it has convinced the mining stocks and it has impacted the mining stocks favorably over a couple of quarters before you really get their price, because they're kind of so jaded and have been stung so many times. When you get a quick run up in gold and then you get some speculation in the mining shares, only to have gold come back down to earth real quickly, and then the mining shares get hit even harder. So it's almost like they're needing to be convinced that gold and silver are going to maintain these higher plateaus before you see it start to factor into the price of those shares.
Yeah, well, we've seen the letdown happen so many times, right?
Yeah, exactly.
Many times. And here we are. Now it maybe is really happening, but it's like the boy who cried wolf, right? You just don't trust.
Exactly.
You just don't trust it. You don't trust what your eyes are telling you, right?
Right. And I think so often traders, especially newer traders or novice traders, just kind of get hung up on these direct correlations that don't exist. And, even when you have traders talk about, well, if the dollar's going down, gold has to go up, or if the dollar goes up, gold has to go down. Now, that's an inverse correlation. That's often not the case. And same thing with the metals to the metal stocks. It's not a direct correlation. And like I said, so many companies have far more factors, a much higher percentage of their profitability is in other costs, not the value of what they're producing. And so if you're going to get into them and find out what their cost of everything is, and then see if the percentage of the metals price that counteracts that is enough to keep them going higher, then fine. But to just think that because gold's rallying or silver's rallying, that this stock should, it's a lot more complicated than that.
Yeah, the relationship really isn't, it appears to be one thing, and then, it doesn't work the way you thought, and you're banging your head against the wall, right?
Yeah. I mean, a perfect example in recently is looking at some of the crypto and Bitcoin type stocks other than Coinbase. Coinbase was moving pretty consistent, but some of your others that had moved very closely in line, your Mara and Riot and some of these others, all of a sudden, as Bitcoin and Ether were taking off and back up to higher levels in Bitcoin, new high levels, those stocks are just heading down. And so there's other factors that go into the pricing of those shares.
Mm-hmm. Okay. So interest rates, everyone was all happy. Interest rates were coming down, but evidently doesn't appear to be the case, does it?
No, they haven't come down. I mean, they haven't come down where the Fed's concerned. They did come down, your mortgage rates and whatnot for a little bit. But I think that from April through July, we're going to see a little bit more of that, kind of a second wave of interest rates declining. Not that significant, but enough to make some difference and to get traders excited and to get everyone in the real estate industry a little bit excited. But I don't know that we're going to see a major decline in interest rates, and I don't think many people are expecting that either.
Yeah. Well, the market was all euphoric about it, but then reality sets in, and if anything, it looks like rates could be going up, right?
I don't know if I see them going up any farther in the near term or in the intermediate term, but I do think that they're still up near their peak and are bumping up against there, that they'll probably continue to do for a little while. But like I said, April through July is the time frame I'm watching for a little bit more down cycle in interest rates, up cycle in bonds and notes, based on my work.
Okay, so speaking of things that have gone up and down, oil right now, energy. So nat gas has been in the dumps for years now, with some notable exceptions when it went up to $10 a couple of years ago. But oil, we're looking for it to go down. It never went down that much, maybe because of geopolitical concerns. I don't know. And now it looks to be heading back up for a bit. What's your opinion there?
Well, you definitely had the OPEC Plus production cuts that they kept extending, even when some market watchers were expecting that to tail off. And that's been one thing that has kept some pretty good support under the crude market. My work has been showing that crude could get up to about $84, and we should probably see a 1 to 2 month peak near that level. And this late March timeframe is the ideal or the most synergy of cycles that I'm watching for a peak. But one comment about you're mentioning natural gas, it has had a very consistent 4-year cycle between its lows. And back in 2020, I did a series of reports about that and why I thought we'd see a 2+ year bull market from there. Some buy signals were generated in mid-2020, and then you kind of slowly came off of that base, and then in late 2021 into 2022, you had that big surge that you referenced, up to $10. Well, we're now right at that 4-year cycle point again. And it was the first quarter of 2020, and before that, the first quarter of 2016, and before that, the first quarter of 2012, when you saw multi-year lows set in natural gas. So it's right into that cycle again. And it has been, the front contract has been dropping down and testing the 160 level where the lows were set back in 2020. So you've got some very significant support also coming into the market. So I expect to see a major bottom start to take hold here in nat gas. But just like in 2020, that doesn't mean that it immediately rockets higher. It just means that you set your lowest point of the cycle, and then it starts to build a base from there.
Right. So, yeah, nothing happens in a day here. All right. Other markets we should be paying attention to here.
I think that's a lot of them. I referenced or mentioned their cryptos, and since late 2022 and throughout 2023, I kept describing this 15 to 16 month cycle that was very consistent in Bitcoin. And it helped time the November 2022 low in Bitcoin. And the next phase was expected to be a high, that it was expected to rally for the 16 months following there. That's when I was talking about in a cycle progression, where you get the invert part of a cycle where it rallies for an entire cycle. And that was projecting a move up into February or March of 2024. Then as we came through 2023, there's a series of reports that I did that are on our website that kept focusing on that time frame and starting to hone it to the middle part of March as being the ideal time for a multi-month peak in Bitcoin. And so we've just come into and through that time frame with Bitcoin spiking to new all-time highs. And so I think that it's getting very close for a serious correction in Bitcoin and cryptos after fulfilling all of these up cycles and the series of buy signals that were generated along that time. So I've been talking about lightening up on some of those positions for those readers and traders that aren't just holding it for years and years, that this is one of those times when I think we could see a very tradable correction.
Interesting, because now the excitement in cryptos, since it hit a new all-time high for Bitcoin, has returned. Everybody'd forgotten about it basically, and now it's returned, and you think we've reached the intermediate high here, huh?
Yeah, well, every time you get that type of excitement, it's usually when the savvy investors and traders have been in it for months, perhaps for those 16 months, and it's time for them to cash in some of their positions and wait for a nice pullback. Let all those weak long positions, those that are impulsively buying it when it gets above 60,000, 65,000, and of course then those traders are talking about how it's got to go up to 200,000 or whatever number is in the stratosphere, and that may be out on the horizon sometime, but can they withstand a drop of 10 or 15,000 or perhaps more in the interim? Because the market has very wild swings. It only takes one type of news item to suddenly shift the perspective. And often in trading markets, they're the weak longs that they buy at the top and then sell at the bottom type of thing, or doing it all on emotion. And so, when you describe a lot of emotional frenzy going on, that's usually what you see near a top or bottom, in this case, a top.
Yeah, no doubt. And it wouldn't surprise me either, although, I don't know, it just, it happened so quickly, That's the thing that surprised me, was I figured it was, but it shouldn't have surprised me, I guess, because we've seen this over and over again for the cryptos, right?
Well, and it had, like I said, it had been building a base for some time. When this one particular approximately 16-month cycle, if you go back for a few years prior to late 2022, it was timing successive lows, which means within that 16-month period, each of those 16-month periods, Bitcoin not only had a significant rally, but then the subsequent correction. So it was able to go through a full phase or cycle of its market action in those 16 months. Then we hit the fourth one in the series, which is usually when you then flip and it extends. So Bitcoin has been in a uptrend for the entire 16 months since that late 2022 low. Now it's up and down, but on balance, that is an uptrend leading into a cycle high. So it's actually been rallying for longer than many of its previous advances. So this has been going on for a while. It's just that it wasn't on everyone's radar, and you usually get Bitcoin is very much like gold and silver and some of the other markets, where I talk about the 90-10 rule, where 90% of the move happens in the last 10% of the cycle, because you get this impulsive, irrational, emotional response, and you get these huge surges at the end, and then it comes off almost as quickly to a higher plateau. It doesn't mean that, it's going to crash and never go back there, but it means that that's where you get a parabolic peak, and then ultimately the pendulum swings back the other way for a while. Markets don't go straight up or straight down.
And we've seen it so many times in different markets. We should learn our lesson, maybe at some point. But I just, the cryptos, it's great when you have a market like cryptos, and you can say, well, but we can point to other instances where we've had markets, and here's what they've done. And because it's something new, you know what they get to say? And some people actually believe this time is different, right? This market's different
this time. Yep, it's always different this time. Certainly all of the principles and foundational things in our world have flipped upside down, and we're at a new paradigm. And yes, so you've heard it through so many different things.
And it never is. Yeah, it starts out as actually not different. It's just like tulips, right? Tulips were different. Yeah. We never had a market like tulips before, right? And then all of a sudden we had a market like tulips, and everybody wound up broke, right?
Well, and it's also with anything, but particularly like when you talk about, say, stocks, they get so ahead of themselves. Like, right now you've got the AI craze really lifting things like NVIDIA, and so is that stock, 900 plus, anywhere near its current value and its current earnings, and no, it's all perception of future value, and that always gets overdone.
Yeah.
And so, even a stock like that's showing some signs of topping, and it had doubled some certain ranges, and a lot of things coming into play right around that, a little bit above 900, and it wouldn't surprise me to see a pretty significant correction from up there. And it doesn't mean that everything people have been saying isn't true, that it still does have that future potential unless something changes. But it means that it has just gotten so far ahead of itself that it needs time for reality to catch up to it.
Well, that's so true. I just want to talk to you about AI for a moment, as far as what you do, as far as examining these vast amounts of data and then actually being able to come up with usable actions or a usable plan. Is it going to make any difference to what you do?
In the immediate future, I don't believe so. With a lot of those things, I'm not always on the technical cutting edge, so it may be a little longer for my implementation of it. But I think there's also a somewhat discretionary facet to what I do as well, although I guess the argument is that AI can even, do that same type of thinking and learning and evolving. I think it's something that will certainly play a role and can help in some of in researching certain aspects of it. But to what extent that is, I really don't know at this point.
All right. Well, I know, I use it for writing show notes and things and doing various tasks, and it can't do 100% of what I do. But when I watch that robot giving the guy the apple, putting stuff in the pan to wash, picking stuff up and moving away, I said, it's just not going to be that far off, is it?
No, not at all.
Yeah. So, all right. Hey, Eric, tell us the best place to find you these days.
It is always at InsideTrackTrading.com. That's inside with the extra I in the middle, INSIIDE, tracktrading.com.
Excellent. And the link is in the show notes to this interview on financialsurvivalnetwork.com. And when you go there, just make sure you sign up for our free newsletter. Eric, appreciate it. I know you got a couple free newsletters too that they can sign up for. We will talk to you in a couple months and see how this shakes out.
All right. Thanks very much, Kerry. Great to talk to you.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.